All right, everybody. Thank you for showing up. This is Nicholas Lau from Dallas, Texas. I am joined by King Leonidas, Marianne, and Coach D and Coach Michael, but he's not on the screen yet. Maybe he's busy, but that's okay. We'll get Coach Michael in just a bit. So anyways, what we're going to do today is we're going to show you the basics of copy and paste trading. This is one of the integral parts of the whole Epic experience because it allows you to earn while you learn. So while you're learning Forex trading, while you're going through Coach Max's university, you can still make money, whether it's on demo account, whether it's fake money and you're just practicing, or even if you want to put a little money in the markets. The thing is, within your first week, we want to teach you copy and paste so you can at least have an experience. Whether you do it with real money or not, your hands are going to start. It's almost like when you get a video game system, right? When you get that new PlayStation and you're playing Madden football and you're like the first few days, you just suck at it. The computer just kicks your butt, right? Because you don't know where all the buttons are. But as you play more and more, your hands start, knowing where everything is. Same thing. When I started copy and paste trading, I would make problems. I wouldn't know where my decimal points were. I'd press buy instead of sell. But those are things you want to mess up in demo mode. You don't want to mess up when you're doing real money. So don't rush this experience, because when you learn how to do this, it's going to change your life. So why rush it, right? Make sure you learn it correctly. So anyways, while I get my thing set up here, hey, Leo, can you give people a little bit of experience on your Forex journey and like when you started, because you didn't start just right into the market. There was like a gradual process, right?
Oh yeah. For me, I was very, very nervous about Forex when I got started because my mindset on it was I thought it was gambling. I thought it was like going to the casino, shooting craps, and if you really didn't know the math behind it, there was no way coming out winning. That's just how I thought, and a lot of it was manipulated because of news and those TV shows and stuff, seeing the hedge fund guys and the guys on Wall Street and all that kind of stuff. And I thought, to make it big in Forex or trading, you had to go be on Wall Street. You had to go to the Wharton business school and all that kind of stuff. That's really what I thought. So when I got exposed to Forex back in, I think it was like 2016, man, that didn't even sound like that was long ago, but it's a little while ago now. I was very apprehensive. I was the guy that was like kicking and screaming. I didn't really want to see it, but because it was a network marketing opportunity, I got involved because of the network marketing side, because I knew how powerful the network marketing side was. And I started to dip and dabble a little bit, just playing around on demo account on my phone, you know what I mean? And when I started to see, okay, if it's blue, I'm making money. If it's red, I'm losing. So I always wanted to be blue, obviously, you know what I mean? And then I started to really open my mind a little bit, and I went through some of the training, and then I started to hang out with people that were actively learning how to, and teaching how to trade Forex. And I was like, this is pretty cool. You don't even need to know how to graduate high school. You don't even need to know how to graduate high school to do this. You know what I mean? It opened my mind. So then I started, taking little live trades here and there, starting really small. I started with $10. I was trading with I forget the broker now, but just $10 I started with, and it started to build my belief little by little, little by little. I said, okay, so when I think I had a day when I made like $2,000, and to me it was a fluke at the time because I copied and pasted someone else's signals that they gave me, and I made a mistake and I put the wrong lot size. And when I went back, it was like, oh crap! I saw it was like 2,000 and change. I just pulled it all out. I didn't even know if the trade was done. I didn't even know if it was just starting. I just thought $2,000 eject immediately. That's $2,000 I never had a little while ago. Give it to me. So I said, cool. So I just did this, and I didn't have to go sweat. I didn't need a college degree. I didn't need to learn anything special. I didn't even have to leave my bathroom, my bed. I literally just copied a bunch of numbers, followed the pair, and boom, money was there. Now, I've had losses. I've lost everybody's going to lose money. You're not going to win every single trade. That's impossible. You know what I mean? Have I blown accounts? Of course I have. Have you blown accounts? I'm pretty sure everybody has. You know what I mean? Whether you put $100 in there, $1,000 or 5,000, you're going to lose at some point, but you're not always going to lose. You know what I mean? It's just like every day in life. Some days it's going to be sunny, some days it's going to rain, but it's never going to be always sunny, and it's never going to always rain, right? So just keep that in mind when you're with Forex, okay? It's a give and take, and there's sometimes you got to step back, maybe take a day off, maybe take a week off, maybe take a month off, and get back to work because it's an emotional game. Now, I like the network marketing side of it because even if you're losing in Forex, you're still winning on the network marketing side. That's pretty much a free paycheck, so to speak. and it's residual. So you can literally take your weekly earnings, put it right into your broker, and then you don't even have to worry about borrowing money or going into debt or the risk of losing, which you don't have. And the cool thing about it is you can have an iPad, you can use your mobile phone to do your trading. It's very simple. It's very streamlined. After I really got into it, I bought a car from money that traded Forex. I built, incredible relationships with many different people. And it's, even though, I've changed, how do I say this? I changed opportunities. My mind about Forex has always been the same, because Forex is a $1 trillion market. So there's no shortage of money. You know what I mean? Oxygen, most important, than money. So if you got those two things down packed, and you can trade from your phone, all you need is what do you call it, an internet connection, and literally 10 to $50 in a trade account, and you can go to our back office in Epic, and I'm sure Nick's going to talk some about that. Copy and paste the signals, and people like to say, "Hey, well, how do you know the trade's over?" Man, look at it. If it's blue and your heart's jumping and you feel good about it, it's over. Take the money out. You're good. You know what I mean? And you get comfortable to know, well, okay, I'm gonna go and I'm gonna learn how to count pips. I'm gonna get 50 pips, or I'm gonna get 100 pips today, and you'll know what, if I get 100 pips, that will equate to whether it's $100, $1,000, $10,000, and that's all based on your experience level, your experience being your level of comfort. How do I say this? Your level of being comfortable earning or making big money in a very short period of time. Because people say they want to make big money, but trust and believe, when they see if somebody on the screen say they want to make $10,000 and goof up, and they see a trade that's 10 grand and they win it, they're gonna be so blown away. They're not gonna know how to process that. You know what I mean? Because it's something that you have to grow into, get used to doing on a regular basis, believe it or not. So give yourself time. Don't let yourself get overwhelmed, because you might have a fluke and you might make it like that. You might have a fluke and lose it like that. But don't discredit yourself, and just treat your wins like your losses and your losses like your wins. Keep that steady emotion and be balanced, because money is all about energy. You know what I mean? There's no shortage of it. I think I read somewhere today, this is I'm not trying to get into politics, but somebody was saying the president gave like 43,000 millionaires over $1 million in stimulus. Just that number, 43,000 millionaires just in the US alone. That blew my mind. And I'm pretty sure there's way more millionaires than that in America. You know what I mean? So when you think about that number, just 43,000 millionaires, don't count yourself out, even with trading, even with learning how to do this, because you don't need a college degree. You don't even need a high school diploma. If you can learn to read, you can count to probably 10 or 50. And I'm not trying to insult anybody's intelligence. I'm just trying to let you know, like, you don't have to put that much pressure on yourself. It is not that difficult. It's a simple step-by-step process. And I'm going to pass it back to Nick so we can move on to the next most important thing, the trading.
All right, thank you, brother. Appreciate it. Okay, so the first thing, you have to pick a broker. Michael, can you unmute yourself for a second, because I want your opinion on this? Let me know when you're free. Okay, so
yes, hi Nick.
How you doing? So what I would recommend everybody, we don't want to make broker recommendations, but I want you guys to make sure you pick a broker that will allow you to create a demo account without having to make a deposit. Okay, some of them require you to make a deposit. I would recommend that you probably just start with Hugo's way if you're going to demo. Okay, now Michael, what are the differences? Like when you're looking for a broker, is there anything specific that you look for?
Yes, absolutely. So first of all, the first thing I look for is the broker regulated or not? This is really, really important. You have to investigate it, because there are so many brokers out there that are not regulated. And why is this important for you? For instance, I'll talk about the different brokers, and some of them actually don't work in the US, and some work in other countries, or so on and so forth. But the broker that I'm using, a while ago, one of my friends, he was on a gold trade. And what happened was there was a very huge spike when there was nothing, like there was no major news happening. It was just like a normal trading day with no major events. Yet there was just a huge spike. And that spike was in the opposite direction. And it blew his account. And when things like these happen, what you need to do is you need to get back to the broker and try and find out what's happening, so on and so forth. So because they are regulated, he didn't actually threaten them, but he explained what happened on an email, and he said like, I'm going to file a complaint with the like regulate I don't know how to pronounce that word, with the regulation body that they're registered with, if they were not going to do anything with it. Now, they said they will investigate. What he did was he had to copy the transaction ID and he sent it to them. They were investigating it. And it turned out to be that it was a problem from their liquidity provider side. Okay. So each broker has a liquidity provider. And that's why sometimes from broker to broker, you'll see at the same instant, the prices might be slightly different when you're looking at your MT4 app and stuff. There are many there providers. And so when they did their investigation, they said, yes, it turns out to be like it was a mistake, something to do with how their internal like network works or something like this. And not only did they refund him back the money that he lost, so they restored his account, but they gave him 500 sterling pounds as a compensation for the mistake that they've done. Now, if that broker was not regulated, good luck with that. You probably can't do anything about it, because whom are you going to complain to if the broker didn't do anything about it? So that's number one. Number two, you have to find out whether this broker is actually operational in your country or not. So, for instance, Hugo's Way, funny you mentioned them. Like, I personally don't like them. They work in many countries, but it's one of the most popular brokers in the US because they operate in the US basically. But for instance, I'm using another broker. I'm using IC Markets. They used to work in the US, not anymore, and that's for regulation purposes, basically. And there's another broker, for instance, that works in Canada and the whole of the world, but not in the US. So the US in general is highly, highly, highly regulated, and they're very careful when it comes to which brokers can operate and so on and so forth. I haven't seen that many brokers that will ask you for a deposit, even if you want a demo account. To be honest, I didn't come across many of them. Like whenever I wanted to try any broker, it was very easy to start a demo account, and Hugo's Way is one of them. For instance, you don't need to deposit. I think,
Yeah.
isn't that true, Nick? Yeah.
Yeah, you don't have to
So
get it, and that's why it's a great place to start, because for demo purposes, they don't need to make a deposit. But yeah, the U.S. is very regulated. If I didn't live in the U.S., I'd probably use IC Markets and Black Bull Markets out of New Zealand. Those are like two of the best ones. But here in the U.S., we have a lot of limitations. So right now, I use Hugo's Way and Prosperity, and it is what it is. But I mean, we have to play with the hand that we're dealt. But while I'm doing this, so like, okay, this is Hugo's Way. So when you create an account and you go to my account, so this is what I want you guys to do. So if you haven't done this before, so you want to create an account, okay? Now what you want to do is create a demo account, okay? So this is an account that has play money, so it's not real money. So you go here to demo, and then you select your leverage. Now, Michael, this is where I wanted you to chime in, because you're probably better at explaining. How does leverage work, and why do we use leverage?
okay, that's a really good point. So leverage is money that you're borrowing, basically. And I think one of the reasons why IC markets, you can't use IC markets in the US is because they're offering up to 1 to 500 leverage. Okay, I think in the US, the maximum you can have is 1 to 30 or 1 to 40.
I think maybe 1 to 50, but I think that's about it.
Yeah, something like this. So here in the UK, so far with IC markets, I can actually open an account with 1 to 500, but this could be lethal. Like it's really mad. I still have an account with 1 to 500 leverage, but I use it very carefully. And leverage works like for let's say, for instance, you've got a leverage of 1 to 50. That means for every $1 of capital you got on your account, you as a trader, you receive $50 to trade with from the broker. So the broker is like, it's just like, for instance, when you leverage, for instance, a mortgage. Like when you want to buy a house, let's say it's the house is 500K. You don't have 500K. You put a small deposit, but towards your deposit, the bank gives you a mortgage and allows you to buy a house worth 500K. So leverage works more or less like that, basically.
Okay, got it. So basically, the Forex market is a very liquid market. There's a lot of money. And back when it was just the banks and the hedge funds, they can afford to do this because they have the money. But for us to participate with them, we need to take our small deposit and be able to leverage it at a higher point. Is that correct?
Exactly. It's just like money you're borrowing, and how much you've got. You will always look like when you go on, when you look at your MT4 app on the live, like when you're looking at your live positions at the top, you'll see the margin and different things, and so it will tell you how much margin you've got. Okay, and that margin. It depends on the leverage that you've got on your account.
Okay, matter of fact, while I do that, I'm gonna log into this Zoom with my MT4 so we can share that screen as well. So okay, so this is what I want you guys to do. First of all, if you already have a broker account, that's great if you know what you're doing. But if you don't, go to Hugo's Way, create an account. So create a demo account, and you guys will have this recording so you can go back and do it again. So your leverage would be your maximum leverage. Now you could pick whatever leverage you want. Just understand when you have a smaller balance, you'd want a higher leverage so you can participate more in the markets. Like even when we did our interview yesterday with Aaron Crosby, he's a 7-figure trader and he still uses maximum leverage because he's like, what happens is if my balance gets too high and I have too much money in the account, they're going to cut down my leverage because they're going to want me to use more of my own money. So what he does is every time they try to cut his leverage, he withdraws the money to his bank account so he can always stay in maximum leverage. And now leverage, Michael, you can attest to this. Leverage has its good sides and its bad sides. You can win a lot of money, but you can also lose. Is that correct?
Absolutely, absolutely.
Okay, sounds good. So let me.
It's basically the more leverage you have, the higher the risk.
Okay.
You're risking more money on the table. If, like it will be more risk, especially if you don't know what you're doing. But it like if you know what you're doing, it's actually a blessing. The more leverage you've got, it's a blessing. And I know, like for instance, IC Markets, they send out an email for those in Europe. Now here, the UK is leaving the European Union by the end of the week, on the 31st. And so they haven't included the UK, but the EU has imposed some new regulations, and they want any person with an IC Markets account, their leverage to be lowered down. I think the maximum is 1 to 30. And I'm a part of another community of traders, and they're all like moaning about this. Like they were saying, like this is a disaster for us because they got used to, like especially for those scalpers, they would want a higher leverage. But any new person, I wouldn't advise you to have a high leverage. One thing, the last thing I want to add, when you have a like 100 $100 account, for instance, if your leverage is very high, like on 1 to 500, you'll be able to open probably with a micro lot size or just 0.02, for instance, or something like that. You can open 10 positions, for example, right? Now, this is what I mean by it's high risk. So if these 10 positions go against you, you're blowing your account. And if they go in your favor, you're making good money. But when you've got a 1 to 30 or 1 to 50, the broker will not allow you to enter more than 1 or 2 positions. And if you try to enter on another new position, they will tell you you don't have enough money on your account. So that's why smaller leverage is actually good, especially for beginners.
Absolutely.
Can you guys give like specific recommendations if a person's a beginner? What do you recommend they put at the balance? Just a recommendation or example, because I haven't heard that yet. What do you recommend they put the balance at? What do you recommend they put the leverage at based on that balance? You got a couple examples for us?
Yeah, so I mean, my personal opinion is if somebody wants to, get scale up their money quicker, I would tell them to do maximum leverage. Okay. Now, like Michael was saying, that comes with some risk. As a matter of fact, on the call yesterday, Jan was saying, I'm a very conservative trader. I don't want to use maximum leverage. And Aaron told him, you don't have to. Just understand that the money's going to grow a little bit slower if you're going to use a lower leverage point. But it's up to you where you want that to be. So for example, on this one that I'm doing right now, I'm going to use a maximum leverage. I'll probably put 3,000 in the account. The only reason I'm doing 3,000 is I already have one that has 1,000 and two, so I don't get confused. So I would go ahead. So if you guys want to start your account with $100, 500, whatever, remember this is like play money. So you just go ahead and create the account. And then what's going to happen is they're going to send you an email with your...
Nick, sorry, can I interrupt there for a second?
Yeah, please.
Just so you guys know, if you're new and you put in, $100,000 in your demo account, that doesn't make any sense because you're not going to start your live account with that much. So when you start taking a bunch of trades on $100,000 account, you're going to see these huge wins and huge gains, and you're going to get that mindset. So start your demo account with something very close to what you're actually going to trade with live money. So you get your mind straight and this is what you can expect. And you're not expecting, $5,000 win on a gold trade or whatever, because you're not going to have that much money in a live account. So trade with something that's going to be close, like 1,000 or right, a realistic amount. You're not going to start with $100,000 in your live account when you're new. You know what I mean?
Yeah, and
so
I've seen some people, they start with like these high balances, and I don't understand the concept. Like I have a friend who's actually an educator, and he tells people to start with 100,000 account, and I was like, why would you do that? Because when
that's not good.
When they go trade with real money, it's not going to have the same experience. They're going to be like,
right.
Oh, I made.
They're going to win $2 or $3, and they're going to go, wait, what? Yeah.
Right.
On their
sorry. About this point though, regarding that educator you're referring to, Nick, there's no problem. It doesn't matter what balance you have. Obviously, it makes more sense to have a realistic balance. But let's say, for instance, you're brand new and you blow the account, the demo account, very quickly, right? You will have to open another one. So sometimes as well, when you use just the maximum, whether it's 100K or whatever, it will just give you more time to play around. And at the end of the day, let's say your leverage is 1 to 50. If you entered a position of with a micro lot size of 0.01, irrespective of what's the balance in your account, the trade will be the same. The difference only comes when like the big balance will just allow you to enter some crazy lot sizes. That's all it is. You can't do this on a small account. But it works both ways. I see where you're coming from. It makes more sense to be more realistic, but there's also a different view of why you should have a 100K demo account.
No, and I defer to you and I defer to Leonidas because you guys have been trading a long time. I mean, for like me and Dee and Marianne, like we literally just started trading here in the last few months. I mean, we're coming along. We're going through the university and stuff, but that's the reason we joined Epic. We joined Epic because we wanted to learn trading. They have the university, and the way Coach Max teaches is it's beautiful because she can take somebody that knows absolutely nothing and get them going. But the thing that we wanted to do is make sure that the people see what happens is when people start going through the university for 2 weeks and they haven't done anything yet, then they feel like they're actually back in school. So Dee made a great point. Let's get these people copy and pasting within their first week so they can actually experience what's going on. That way they can have some fun while they're learning.
So Nick, when you first started trading or learning, excuse me,
yeah,
and you opened your demo account, did you use the 1 to 500 leverage?
Yes, I did. So
so this is not realistic then, okay? Because on a real account, you can't have 1 to 500 in the US, right? So that's another thing. Like it should be as realistic as possible. So
I have a 1 to 500.
Yeah, most of us use offshore brokers.
Yeah. I'm using.
Can.
Yeah. We all use Hugo's Way or Prosperity.
Hugo's Way.
But do they allow you to have a live account with 1 to 500?
Yeah, they're just not regulated in the United States.
Yeah.
There you go. Okay, okay, fair enough. So if they're not regulated, you just have to be careful. That's all it is.
No, yeah, it kind of goes
Yeah.
back to that story. I mean, people have stories because it's like if something happens and that company goes out of business, you have no jurisdiction, right?
Yep.
Yeah. So that would be the only thing is, and that's why people say that when you make money, withdraw your money. Don't just leave it in there.
Absolutely.
So Hugo's is regulated or not regulated?
Hugo is not really regulated in the United States. It's an offshore broker. So if you were to use a broker in the United States like TD Ameritrade or something, they won't let you use more than 1 to 50 leverage. And that makes it very tough to get your account going. Like Leonidas is agreeing and he's eating. He's like, yeah, I know what you're talking about.
But by the way, you said that they're not regulated in the U.S. This is a very important point. So they are regulated, but not in the U.S., right?
Correct.
Okay, so this is actually a good point. The IC markets, okay, they're regulated in Australia, not in the UK. For as long as they're regulated, that's fine. At least you should just find out, they're regulated in which country, for example.
Right.
This is what's important. But even if they're not regulated in the US, you can file a complaint if something goes wrong in whichever country that is, and it's all by email nowadays and stuff, and that's fine. So it's like don't worry, or be like hesitant to use them because they're not regulated in the US.
Got it. So what I'm going to do right now is I'm going to log into my new Hugo's Way account. So let me share my screen from my, because I want everybody to understand how this works. Hey, I'm looking at myself.
And you said everybody would get an email, you said, right, Nicholas? Like once they create that, right now what they should have is
I'm going to show that email right now.
okay, cool, thanks.
Okay. So screen.
And so that way I understand clear what you guys are saying is at least for using Hugo's Way, you put in whatever a recommendation based on a particular strategy is you put in whatever balance that is most close to what you might start your live account with. And then a particular strategy is leverage. You can leverage 1 to 500, or if you want to leverage less, there is more risk. But as a beginner, you also can leverage 1 to 500. Am I correct in what I said?
Yes.
And these are strategies, meaning that it doesn't mean one person is right and one person is wrong. These are strategies based on you guys' vast amounts of experience that we don't have.
Correct. So
okay, wanted to clear that.
I wouldn't say vast, not for me, but anyways.
Okay. Well, Michael, I mean, I'm encompassing everyone. You know what I mean? Michael Leonidas.
So Hugo's Way just sent me an email. So you've registered your demo account. So here's my account number. So let me just go ahead and grab my account number. Okay, now I want you guys to log into your MetaTrader app. So
we didn't get MetaTrader yet. Well, you didn't show us how to get MetaTrader yet. I mean.
Okay, so if you have Apple, it's in your App Store. If you have Google Play, it's in your Google Play Store. Just look up MetaTrader 4. So let me see if I can bring up my App Store.
If you have a picture of the icon as well.
Yeah, I'm just gonna.
Okay.
Okay, so you go to your App Store, go look up MetaTrader 4, and make sure not to get it confused with MetaTrader 5. So you'll see that icon right there, MetaTrader 4. Okay, now what is MetaTrader 4? MetaTrader 4 is the service that we use to place our trades. So you can open an account with practically any broker. And when a broker sends you the email, like the one I just got with your username and password, you'll log in over here. So the way I've explained this to people before that made sense to me is MetaTrader 4 is like your PlayStation or your Xbox. But in order for you to play the game, you have to go get the game. And the game is your username and password from your broker. Once you put that in, now you can start playing. Okay. So we go here, we open MetaTrader. Okay. So as you can see, if I want to create a new account that I just created with my broker, I will click on new account. Okay. Now you're going to log into if you open a demo account, that's just a MetaTrader 4 demo account. You don't want that. You want a demo account specifically from your broker, so you have their regulations and their rules, their spreads. So what I'm going to do is log into an existing broker. Okay. Now, if it wasn't already on my list here, what I would do is type it in here. I'd go Hugo. And as you can see, there's a Hugo demo account, a Hugo live account. I don't know what a Hugo real account is, but we're here to set up a demo account. So I'll create Hugo demo. Okay. Now I already copied it from my email. So let me paste it. There's my login. And let's go back. Hang on. All right, there's my password. Now, if you remember, I set up this account with 3,000 play money, okay? So if we go right there, all right? So we have a brand new demo account with $3,000. Does anybody have any questions? I saw something light up. Let's see, I'm setting it up on screen. Okay, cool. All right, perfect. And let's see, does it broker have it? Michael, you still there?
Yeah, I'm here.
Okay, the other Michael from Alaska, he had a question. He said, does the broker add a fee for leverage? The broker makes money every time we make a transaction, correct?
That's correct, and it's called spread.
The spread, okay. And yeah, I'm not sure who told him to use 1 to 20. Michael Dowling, where did you hear 1 to 20? Was that in Coach Max's training? Because I don't remember seeing that. But anyways, okay, that's fine. We'll get back to that. So, all right, so you have your demo account set up with $3,000, okay? Michael, I'll probably need your help on this one. Do you? I know Zane likes to use advanced. Do you like to use advanced too?
Yeah, absolutely. It's important because it shows you the live spread. As you can see, at the bottom of every pair, you'll see it says spread. Now, how do you actually know what the spread is? So on the Aussie USD, it says spread 14. This is actually not 14 pips. It's 1.4 pip.
Ah.
So whatever the figure is, you divide by 10.
So D, that was the thing we were confused about the other day, right? Like, why is the spread so high? Okay,
You said
so now,
divide by 10. Is that what you said?
Yes,
or move the decimal
exactly.
place, basically. Is that what you're saying?
Yes, yes. So
And is that going to
Euro,
be for all the currencies? Move it
yes. Yep. So Euro USD, that would be 0.8 pip. So that's less than 1 pip.
Marianne, we struggled with that, right? Now does that make more sense? Because we're wondering why the spread was so high.
It does, but it doesn't make sense when I get stopped out on a trade or something and it's and I'm doing 20 pip and dip, but I'm losing 26 pips. So, I thought the spread was 6. That's what I was thinking, because I'm losing more than I'm actually putting. I'm putting my parameters in at 20 pips, stop loss and take profit, but yet when I lose, I'm losing 26. When I win, I'm winning like 13. So I thought that was the spread. The difference.
It was the spread.
But if you said it was only 1 pip, then how is that like 6 or 7?
No, it's not fixed. As you can see, it fluctuates. So
right
at the time, yeah, it fluctuates all the time, and it depends on the time of day. Like for instance, I wouldn't enter. That's just an example. It's not like a rule of thumb. I wouldn't enter a brand new trade anytime between 9 p.m. and 11 p.m. London time. This is usually called spread time. And that's the time when you usually see the spread is pretty high. And during high volatility times, let's say there's news in the market or what have you, you'll see the spread jumping up the roof. You have to be really careful with that. Don't enter a trade when there is high news. That's one thing. Another thing that you should be aware of is there's something called exotic pairs. So if Nick hits the plus button, but before you do that, I want to show something on this screen. When you're adding currencies, you'll see on the MT4 app, they're categorized on major currencies, exotic, minor, something like this. If you look at the bottom, the last 2 currencies, this is the euro against, I think this is the Czech Republic or something. I don't know, this other currency, CZK. Look at the spread. Look at the spread. Yeah. This is 204 pips.
Yeah.
So basically, if you're choosing any kind of exotic currencies, and the last one, I think this is probably the euro against the Denmark currency. This is, yeah, so you see this one is 18.6 pips.
Right. I only trade, mostly Euro USD, and I've never seen the spread. When I'm trading during the day, I'm in California, so when I'm trading during the day, it's never more than like 8 or 9 for Euro USD. That's why I couldn't figure out, why am I losing 13 pips? Or, you know what I mean? It didn't make sense to me, and that's still something that I'm learning. But because if you're saying the odd USD is 1.4 and Euro USD right now is at 8, according to this,
that's less than 1 pip. Euro USD is less than a pip.
So obviously there's something else going on in my trades.
No, but as you can see, it's fluctuating. Look at it.
Right.
Euro USD, it's fluctuating.
But Euro USD, I don't think the spread ever gets to, you know, 6 or 7
Mike,
pips.
yeah, I think what Marianne is saying is, how come when I do 20 pips and dip and I lose a trade, I lose more than 20 pips, but when I win a trade, I don't win 20 pips.
I win less. So that's, and it's not like 1.8 pips, it's like 6 or 7. So anyway,
because
yeah.
the broker is getting their cut basically, and that's why it's important, like, to put this into account, right? If you really want to get 20 pips, for example, from your trade, and you know that your spread when you entered is around 2 pips, so you put 22 pips.
Right, which I'm doing now, but it's still,
Yes.
last night I lost Euro USD and it didn't work out right, the math. But anyway, that's another story. So go ahead, Nick. Go ahead.
So
Where
when
were
you,
we?
Michael, when you were talking about really high spread, like what number would be considered high spread?
Let me tell you what's the average of a good average spread to enter the market. Anything up to 3.
3
Anything
pips, right?
between 0, because sometimes it would be 0 sometimes at some points. Between 0 and 3 pips, okay, that's the normal. Okay, anything above that, it's considered to be high, but it depends. Like, I wouldn't mind going into a trade with a high spread if I can see there is a high probability chance for me to win the trade. But it can be anything from 3 upwards. I mean, I've seen some crazy. The other day, I sent a screenshot to my team showing them the spreads during these spread hours, and we had normal currencies like GBP USD or GBP NZD, and the spread was like 20. It reached at some point 24 pips. It was crazy. So I wouldn't enter anything like that.
So to reiterate as well, that when he's saying 3 pips on this screen, it would actually say 30, because you don't forget you have to move the decimal spot. It would say
Absolutely.
30 on the screen, and that would be 3 pips. So for us beginners, Mike is saying anything over 3 would be considered high spread. And for beginners, you might want to not take that at the very beginning. That's a strategy until we get a little bit more experience, and then you'll be able to make your own judgments on if you want to take higher spread trades. Right, Michael?
Yep, absolutely, I agree with you.
Michael, let me ask you this. When we get a trade signal, whether it's from corporate or whether it's from our team or even from you, should we look at the spread first and determine if we even want to take that trade? Or if an educator gives it, they've already done the research?
No, actually, no. When you get a signal, usually the educator is focusing on the analysis of the chart or what have you, and they send out the signal, right? What you need to do is don't enter any signal blindly. That's the first thing. So first thing, let's say it was a Euro USD. Anyhow, you would jump into your MT4 app and you would look for that pair, right? So that's why it's important to always leave it at advanced. Don't use simple.
Okay.
And so you will be able to instantly see what the spread is even before you touch on it and tap on it and hit trade.
Got it. Okay.
Or look at the chart.
Yeah, everybody make a note of that. Where it says simple versus advanced, always use advanced so you know where your spreads are. It's very important if you want to be a proficient trader. All right, cool. So, all right. So the next thing we wanted to do, you said to click the plus sign and you wanted to look at something, Michael?
Yeah. So here, you will see. Can you see? It says exotics. Like, you can on an iPhone, you can search for the pair. I think on an Android you can't. Like, now you can write Euro USD or whatever the currency is.
Yeah.
Once you find it, you can add you touch on the plus sign and you can add it, whatever the currency. On an Android, I think you need to actually go into the category and pick the pair. You can't search for it at the top, if I'm not mistaken.
Now you can search it, Mike. I got an Android. I did it a few days ago. You can search it on Android.
Okay. So as you can see, there's like exotics, indices, futures. So that's what's available on the by your broker basically. And if you go into exotics, Nick, these are the currencies that I wouldn't say I would avoid, but these are the currencies that usually have high spreads. If you add any of them just for demonstration purposes, and then go into the main dashboard or something, you can see like euro. Just pick few of these,
Just
and
Okay, that's 126 is the spread. So 12.6, right?
yeah. So this one is 12.6. It's not too bad actually for an exotic pair.
Okay. Yeah, that actually isn't that bad. Okay. And then, so for when you guys are first starting, most of the educators are going to recommend that you just stick to Forex crosses. Okay. No metals, no indices, no exotics. Just stick to your Forex crosses. Now, your Forex majors are anything with the United States dollar. Those are your majors. Anything. So all of those things that pair with the US dollar, if the US dollar is not included and they're just pairing with each other, those are Forex crosses. The Canadian dollar, the Swiss franc, the Japanese yen, the Australian dollar, the Great British pound, the Japanese yen, New Zealand dollar. Those are your other like second tier, right behind the US dollar. Those are the ones where you combine them and they're called a Forex cross. So beyond this page and the US dollar, you don't want to be messing around with anything when you're just getting started. There's more than enough trades without having to mess with exotics and indices and crypto and metals. But if you guys get interested in that, every once in a while, one of our educators is going to call a crypto signal. So you go here to crypto, and if it's a Bitcoin signal, you just look for BTC USD. Okay. If it's a metal, if XAU, where is it? XAU USD.
The third one.
Yeah, third one. So that's US dollar versus gold. And there's people. I think Zane loves gold, right? Is that correct?
Yep. Yep.
There's some people, they just love trading gold because they've mastered it. They know how it moves. They know how it goes up and down and stuff. But anyways, so that's pretty much your basics. Now, how would you go and place a trade? First of all, let's go ahead and share Telegram so you guys can see. All right. So can everybody see my Telegram? Dee, can you see it, Marianne?
Yep.
Okay.
I see it.
All right, so here's Telegram. Okay, so here's the Epic Forex signals. Let's start here, okay? So this happened at 5:58 in the morning for me. So early this morning, Josh Rosario had a trade, okay? So he said that this is a sell market execution. And it's for, hey, GJ, Aaron's favorite pair. So GPG, so the British pound and the Japanese yen. So what Josh is saying is like, I want you guys to sell this. Okay, so I'll have to go back to that in just a second. All right, so this is the entry price. So what he's telling you is when I entered this trade, this is the number that it was at. So if you saw this trade 10 or 15 minutes later, and this is not the number, if it's not close to this number, be very careful about getting into the trade because you don't want to get in too late. You want to get in somewhere around this number, okay?
How
Now,
can we tell where, or are you going to show us where that number is?
yeah, I'll put the trade in. Well, yeah, I'll put the trade in on the deck.
Curtis, I can't mute Curtis for some reason. Can you please mute yourself? Because you got some background noise going on there. It's hard to hear Nick.
He's muted.
It won't let me mute him. I've been muting other people, but I can't mute him for some reason.
Oh yeah, he's on here twice. I'm not sure. Okay, that's fine. All right.
Because there was some background noise. Okay.
Yeah, there is no mute there. All right, so you have different take profits, like Aaron was saying. And like honestly, if you guys didn't watch that interview with Aaron, go ahead and watch it. Just fast forward the first 30 minutes and then get to the Q&A part. But anyways, so take profit 1. This is the target. So his target, Josh's target, even though Coach Max recommends 20 pips, like 20 pips is okay, for some specific reason, Josh is like, I'm going to go after 32 pips, okay? So I want your take profit to be this number, okay? Don't worry about take profit 2. I'll explain take profit 2 in a while. This is your stop loss. Now, what your stop loss is, let's say that the trade goes against you. You're not willing to lose more than 32 pips on this trade. Somebody needs to be let in, okay. All right, so let me go ahead and go back to, let me stop sharing and let's start sharing again.
What way do you do it as far as toggling between the two? What I did was copy and paste it from the Telegram and put it on a notepad. But what way have you found to be easiest to toggle between the Telegram and then hurry up and get it over there to our MetaTrader app?
Okay, well, on iPhone, and I have the ability to copy from my computer and paste on my phone, but
Oh
otherwise,
wow, really?
yeah, otherwise you would have to,
Aren't you the best?
yeah, just manually do it. So, and I don't know, sometimes it doesn't work. Somebody keeps trying. Let's see. All right.
I'm letting them. They're trying to join like a bunch of times. I'm not
Yeah,
sure why.
yeah, unfortunately, some of the people overseas, they have really bad internet connection, so they get kicked out a lot.
Okay, I'm letting them in, but I'm watching it.
That's fine. Okay, so here we go. All right, so how can I do this? Okay, I'm gonna bring up this. Can you, can you still see my MetaTrader 4?
Yes.
Yeah.
Okay, because I switched screens so I could read this. Okay, so we're gonna go GPB JPY. So I'm gonna go look for it. I'm gonna go look under Forex crosses. There it is, GPB JPY. I'm gonna click the little green plus sign. Then I'm gonna click done, and it's gonna come here to the very bottom. Okay, as we see right now, the spread is that's 2.9, right, or 3.0, 3.
So sorry to interrupt you, Nick. One thing I want to highlight as well, you can rearrange them by pressing the pencil at the top. So if you want to put all of the GBP pairs like GBP USD, GBP JPY, and the USD CAD and CHF, you want to put them on top of each other, yeah, by the pencil, and then just move them up,
You know what I
and
was
down.
looking for? I was hoping
I didn't know that.
I thought they would alphabetize them. That would have been perfect.
Yeah.
But okay.
They just put the latest one you add at the bottom of your list.
Yeah. Okay.
You have to rearrange them.
Or you can put them alphabetical order.
Cool. So, Michael, when you look at this trade on the screen, is it something we can still take, or like did it, or is it too late? Let me see. I just want to look at because it was such a long time ago in the morning. But let's look at the chart. Let's see if we can. Let's see, take a trade here. So, okay, so we're looking at the 4-hour chart. So we're just going to kind of analyze this trade. So Josh got into this trade at 138.825. 138.825. Right around there. That's where he got in, where my crosshair is. Okay, so, and this was a sell. I'm gonna assume that trade didn't go that well.
It went up. It's
yeah,
going.
But I mean, depends on the time, right?
Yeah,
that was a while ago. You said 5 in the morning.
Yeah, that was 6 o'clock in the morning. But I was just going to take a trade. But anyways, so what you would do is you'd click on the screen, and it allows you to trade. Okay, we're not going to go into indicators right now. That'll be another session. So you go to trade. Okay, so I have my lot size set for 0.05, which is 50 cents a pip. Okay. When you get started, you'll start with 0.01. So it's 10 cents a pip. Okay. Now, we would put in our stop loss. We could do any stop loss right now. So we're going to go ahead and do a sell. It's not going to be exactly what you see because that moment has passed. But let's just say that a new trade alert just came in. Okay. And the stop loss was 1.4000. Okay. And let's just say our take profit was 1.38000. So when I click sell, now we're into the trade. As you can see on my screen, I have the little indicator set. So it shows where we are now, where the take profit is. So the little green line is when we sold, okay? And the red line is the take profit that we're going for. And the red line at the top is the stop loss. So if the trade went against us and it hit that red line, that would be the end of the trade. You wouldn't lose any more money than that. Otherwise, if it goes down in the direction that we're going, then what you can do is just kind of do a trailing stop loss. And that's a little bit complex, but basically what would happen is, let's zoom in a little bit here. Let's say that this sell started going down and it started coming down right around here. Well, you want to protect your profits, right? You don't want it to come back. So what you'd want to do is take your stop loss and you'd want to move it right about here to where your starting point was. That way you're protecting your profits. And what you can do, and how do you do that? You just go back. So you have an active trade now, right? Let's say you have an active trade. So if you wanted to change anything about this trade, you just slide it over, click on the pencil, and it'll allow you to adjust your stop loss or your take profit. Otherwise, if you want to just leave it alone the way it is, you can just leave it alone. And well, one of two things is going to happen. It's eventually going to hit your take profit, or it's going to go back and hit your stop loss. But that's basically how you execute a trade in its simplest form. I know that was a little bit confusing. So let me show you a few other things here. All right.
Sorry, Nick. I just want to add something quickly, something important you mentioned. First of all, for the TP and stop loss to be displayed on the chart, that's not by default. So whoever just downloaded it, you need to go into the settings to switch this on the settings. But you mentioned moving the stop loss to break even, right? And so when the trade is in profit, then you move the stop loss, you marked up where to move it. Now, this is really important. Going back to Marianne's point about the spread and how much she lost, this and that. So when you move the stop loss to break even, you want to move it between 2 to 3 pips from your entry price. So you go into the screen where it shows the live position. The first number will be a fixed number. That's your entry price. Can you please go like share your screen again, please?
Yeah, give me just a second.
Because this is important. I get asked this question a lot of times. What do you mean move your stop loss to break even? What does that mean?
It's confusing.
Yep.
Well,
So
yeah.
this is what it means.
You wouldn't be moving it though.
Sorry?
I mean, no, this is it's a good thing we're doing this, because explaining it is so much harder than actually doing it. Like when I do it, I could do it in my sleep, but when it's explaining it to somebody, it's like, oh, this is a little bit more complex than I thought it was.
Yeah.
The thing is, like in all of the signals, what I would personally do, and that's my personal opinion, different people do it differently. When, let's say, for instance, the signal has TP 1, 2, 3, and 4, for example. So I normally set my TP, let's say I decided to pick TP 4. I wouldn't enter 4 positions, each one with a different TP. That would be like silly, because if they all lose, you're going to lose a lot of money. So you always enter 1 position per signal. So let's say I chose TP3, for example, and I just saw an alert that the trade hit TP1. When the trade hits TP1, if you still want to stay in the trade, you want to move your stop loss to break even, right? Because if you just want to, if you decide to take partial profits, or you just want to stay on the trade, okay, you don't want to lose any money. This becomes a risk-free trade when you move it to break even. Now, break even, if you can go into the tab, the trade tab, please, Nick. Yep, on this one. So just tap on it once, please. Yep. So as you can see, it shows you what you've put as a stop loss and take profit. Okay. Now the first digit, like the set of digits, don't change. 139.802. This is your entry price, and because we're selling, we're expecting the price to go lower, right? So the GBP JPY, the way to calculate the pips is different to the normal to other currency pairs. So the 2 digits next to the decimal place, these are your pips. So let's say, for instance, I wanted to move it 3 pips. When you want to move it to break even, you want to move it 3 pips. So if you're selling, that means you need to take off 3 pips from that number. So it will be 139.772. Okay, that's if you're in profit. This trade might close because it's just in profit. Now it's loss. Now it's in a loss. So that's when it's in profit. If you're buying, then if you're expecting the price to go up, and then if you wanted to move it to break even, that means it would be 139.832.
Right. So
I hope this makes sense.
Yeah, maybe let me do another trade that has, the 4 digits. That way I can explain, or you can explain that better. So let's just say AUD USD. Let's go ahead and trade this. Okay.
Because if you just move the stop loss into the entry price on the same price, even when the trade closes against you, you will still be losing some money. Depending on your lot size, it could be just a few cents, but
because you're going to be losing the spread, right? You still have to pay the spread whether you win or lose. So
exactly.
Okay.
Okay, so Michael, give me some on a buy here. Give me some digits to put in. Okay, so let's see.
So you
Can you
can add
just take a
20
example
pips.
from the Telegram like we would be doing?
Like, do you want to go for a sell or a buy on this one, for
Well,
example?
yeah, we could do it. I'll have to search for one. That's the thing.
Is there
No,
a more recent one on?
it doesn't matter. You can just pick a random one.
Yeah,
Right,
because
it's demo. You don't have to circle.
Well, yeah. So all I wanted for right now, I just wanted to show them how to count the pips on the 4 digits, and then we'll look for another signal.
yeah.
Okay.
So for example, what you want to do? Let's say there was a signal that came through, right? And you wanted to enter right now. Don't wait to enter stop loss and take profit. Okay, let's go for a buy, for example. Just hit the buy button without entering TP or stop loss. Boom. So now you're in the trade. Okay. What you can do right now is slide as Nick was showing you. Yep. And then hit the pencil. And this will allow you now to enter the stop loss and take profit. So you don't have to enter them there and then before entering the trade.
Yeah.
Right. If you want to enter right, like quickly, you just what do you call it? You just
hit
enter the
buy or
trade and
sell.
Yeah, and it's a good thing to do because if you take too long to enter your stop loss and take profit, the market's already moving. So when they give you that signal, go ahead and buy and sell, and then go and edit and add your parameters.
Yep, precisely.
Okay, so we are in a buy. So let's say that this is a live signal that we're giving right now. So we're gonna say that the take profit is 0.7.
Is it possible if we do it that way, Nick and Mike? Is it possible that we hit the buy first and then go modify? By the time we modify, is it possible that our number will have already passed, like our stop loss will have already passed, and then it won't actually protect us?
No, it's unlikely. Like unless if you entered really late, because it depends on the signal. Usually, the majority of the signals. Let's say, for instance, if it was 30 pips stop loss or 40 pips, for instance, if it was so close to the stop loss, then that means you didn't actually look at the charts. You didn't look at the entry price. You just entered randomly and you entered late.
Yeah.
You see what I'm trying to say?
Well,
one of the,
yes and no.
just
And from the words you're saying yes, but from the idea no. But that's because I'm a beginner. A lot of us on here are beginners, so we're at the copy and paste stage to the point where we're going through the syllabus, so we don't yet know how to analyze the charts yet. So
okay, so
stop loss and everything like that, we don't yet understand. I'll speak for myself. I don't yet understand that. And I know other people who joined around the same time as me don't yet understand it. So that's why I'm like, yes and no.
So let me add to that real quick. One thing to keep in mind when you're looking at the trades, just look at the trend, right? So just looking at this trade that Nick has here on the screen, you can see it just looks like it's uptrending right now. So if you get a position that is to enter at 726.70 and it's supposed to sell, but you're looking at this and it's trending up, you're not going to want to enter that trade. You know what I mean? Because it's trending upwards. So it's always good just to give it a fresh pair of eyes when you see a signal, because you might have missed it. Somebody could have made a mistake. So just so you don't put yourself in a position where you're losing. So just keep in mind the trend is your friend.
Yeah, that's true. And yeah,
precisely.
Yeah, so and this is a buy, so we had a little bit of a pullback here. So this might actually end up being an okay trade. I don't know, but my stop loss is probably too far away. But you know, I mean, we're just giving an example here. So hang on one second. So let me go back to. I'll leave this screen up. I'm just going to go back to my notes here. Okay, all right. So the next thing we had on the topic is how to do a limit or a stop order. So let me see if I can find one on Telegram first. I'm sure we have one. But in the meantime, Michael, if you could just explain the stop orders and the limit orders while I look for one.
Yes, absolutely. I've got here an example. One second. Let me just go into my photos. I've got a screenshot of a really good way of understanding, and for each one of you, you want to put this on your favorites. Let me go into the channel. I'll forward it to you, Nick, so that you can share it with everybody. 1 second.
And while you're doing that, I think I did see an example of one. So let me. Can you guys see my Telegram right now?
Yeah.
Okay. So because I know Sean had a few of these. Okay, here we go. Well, that's Dominic. Let's find one that's Forex pairs. Okay. So,
Just fired it to you.
oh, okay. Yeah. Yeah. So that's yeah. I shared that same image yesterday. So the way that I had liked to explain this is using that elevator analogy. So when you're doing a stop order, that means that you are going to enter a trade only if it hits the number that you're at. So if you're doing a sell and the market is above you and you're waiting for the market to come down and hit your level, then that would be a stop sell. You want the market to stop so you can sell right there and then continue to go down. Same thing if you were to go up. You're waiting at this point, the market's below you, it's going to come up, it's going to hit you, and it's going to keep going up. Okay. So that means you're not going to enter the market right away, but only if it reaches this point. Now, the buy limit and the sell limit, that's the one that I think of more like an elevator. So you're on the 5th floor, right? And the market is on the 2nd floor, but you want to sell. So what you're waiting for is the market to come back to the level you're at, pick you up, and then go back down to the floor. So it's like, I'm not going to join that trade now, because if I join that trade now, the market has already passed me up. But it's like, I'm going to wait up here. If the market pulls back, and the market does pull back, it can't just go straight down. It can't just go straight up. It has to go up and down, okay? Because there's orders all over the place. So when you're waiting there and the market comes back up, now you're going to take that, even though the market's kind of going against you because the market's going up and you're wanting to go down. But you've done your analysis and you believe that if you get picked up at this point, eventually the market's going to go back and go down, and you're going to pick up all of those pips that had originally passed you up. So is that a good way of explaining it, Michael, or did I confuse everybody?
Yeah, absolutely, absolutely. I agree with you, and it's self-explanatory to be honest. On the image.
Got it. Okay, here's an order. So Sean did this yesterday. See, it is a sell limit for the Euro GPB pair. So what he is saying is that we are going to get in at this number, but currently that number has already passed us. So we're waiting for the market to go back up, hit that number, and then we're going to take it back down. Okay, so that's how a sell limit works. And like I said, if it was a sell stop, that means you're just waiting for the market to come to you. It's already above you. You're waiting for a sell. You're waiting for that waterfall to come and get you on the way down. So I guess it's like if you do the stops, it's like a waterfall or like a rocket going off. And if you do the limits, it's more like an elevator. And you know what? I'll probably draw this out for you guys and explain it to you better, but should be pretty self-explanatory, but maybe not. I don't know. Hang on.
Nick, do you want to show on, are you going back to MetaTrader to show where that is? Okay.
Yeah. Okay. So for example, let's use a clear screen here. Let's just okay. So for example, let's say, as you can see, the market's been coming down, but currently it's going up. So maybe you would put a sell limit right about here. Okay, so right where this is, you're like, hey, I'm going to put a sell limit. If the market comes and hits this point, then I want my sell to trigger so we can go back down. That would be a sell limit, as opposed to a sell stop that would be down here. That if the market comes back down and hits this point where my crosshair is, then I want to go down. So that would be the only thing. It's just a matter of where you want to enter that trade and where your analysis takes you. I'm not going to get into the indicators. Like I said, indicators would be a completely different session. The whole point here was just to learn how to copy and paste. I know we went through a lot of different things here. So how do you place them? Okay, so we went through how to place them. Like I said.
Well, if you go, can you click on if you're taking the trade and where you click on market execution to show where you would hit buy, stop, or buy limit, you know?
Yeah, good idea.
Because some people don't know where that is.
Okay.
Yeah, so that's what I was saying. Just grab one from the six so we can see it all the way through the copy and paste part.
You got it. So let's say you were analyzing this market, okay? And you're like, okay, I kind of agree with what the coaches say. Well, it's probably going to be like on the 4-hour chart. I agree with what the coaches say. I want to take a trade. Just, you could either go click the, well, this is what I would do. I would just click here, just touch the screen and press trade, okay? The other way you can do this is when you see the pair that you like, just hold it down and click trade. Now it'll bring you to this. So here's where Marianne was talking about. Market execution is where you want to enter the trade right away. It's like when I press buy or sell, I am in the trade. And then those limits and stops is what I just told you about the waterfall and the rocket and the elevators. So let's say that we wanted to do a sell limit. Okay, so let's go ahead and look at the chart again, just so we can do this correctly. Let's say we just got a signal. Okay, let's say we just got a signal and we wanted to do a sell limit. Okay, well, we'd kind of be going against the trend here. Let's do a buy. Let's do a buy. Let's see, right there. Yeah, we could do a buy here because it looks like the market might be going up. All right, so you're looking at your analysis. Let's just say the trade signal said that we're going to get in at 88841. Well, the market's not at 88841 right now, right? So you don't want to enter the trade because you'll be behind. So what you want to do is go to trade and go to buy stop and 88841, okay? So we can come back and do the rest of the parameters later. Let's go ahead and place the order, okay? So as you see here on the trades, it's not an active trade. It's under orders. It's not under positions. Positions mean the trade is actively going. And look, our GJ is actually in profit. All right, so you have your order here. Now, if you want to edit your order because you're like, well, I need to put in my stop loss and take profit, go ahead and click the pencil, and then you can go ahead and do that. So if you want your take profit to be 888, well, let's see, let's do 20 pips. So that's 84. So you always drop off the last number. So this is another thing we got to go over. When you're doing the 4 decimal places or the 5, you drop off the last number. You only do the 4 decimal places. So pretend the 1 isn't there. So you have 8884. So you have 84. So if you want to add 20 to that, so then you just go 8, or you go 8884 plus 20. So 8904. Okay. So that'll be your 20 pips. Michael, correct me if I'm wrong. I think my math is okay, like that.
Yeah, it's good. It's good.
All right, so my math is getting better. All right, and then your stop loss would be the same thing. So 88841, and then you're, 8884, and then you're gonna minus 20, then 8864, and 188.
You're changing the price, Nick.
Did I? Oh, isn't it? Okay, 88841.
Stop. There you go.
I was like, why does that not look correct? Is that correct? That looks good. All right.
Yep.
Yeah.
Okay, that's 20 pips right there. So now we go look at it on the chart. And like Michael said, I do have some indicators on mine that are not going to be on yours. And we'll do another session for indicators so this doesn't drag on too long. So you can put your stop loss, take profit. If you guys want your RSI down here, if you want your MACD, that will be on another session. All I want to teach you guys right now is just how to copy and paste, okay? So that's pretty much it. Now, let's
Here, this highlighter, this green highlight on the left, by the way, on the pending order, this is just to indicate to you that the price is very close to your entry price. So you might see this flickering. It could disappear and then come back again. If it shows this green on the very left side, that means the price is very, very close. The current price is very close to your entry.
And I also saw this, like when I have a pending trade, when it's getting close to the take profit, it turns green also, right?
Absolutely. That's on a live position, like you're already in the trade, yes.
Yeah.
And if it's very close to the stop loss, it turns red.
So you can get in and out if you want. Or you can get out if you want, if you think it's getting close or something.
Or
you always want to see it green. You don't want to see it red.
Yeah,
definitely.
Yeah. Red is the enemy. Okay, so let me go back to my notes. Okay, so we went over market execution versus buy sell limits. We went over how to place them, when to place them. Okay, so this is another critical thing. Michael, when you give a signal, how long, like do you tell your students like after 10 minutes, don't take it, or what's the parameters on it's too late?
So this is actually like a debatable question because it just depends. Now, you don't want to enter like half an hour after the signal was sent. The good thing is, obviously, you can tell the time on it's stamped on the post when it's sent on Telegram, right? And you need to look at the entry price, like on the signal, it tells you what is the entry. So the first thing you want to know is when the signal was sent. If it's maybe like half an hour or 1 hour, if you are a complete beginner, you don't want to enter. You always want to enter within, let's say, 10 to 15 minutes. Okay, that's for complete beginners. Okay, the next thing is you don't want to enter the trade if the price was 10 pips, and that's not a rule of thumb, by the way. Again, this is just like you need to set rule, like you need to have a trading plan, right? And you need to decide if the trade is making a profit over 10 pips, I'm not entering this trade. Because remember, you're cutting on your chances to make more money. That's number one. Number two, if you entered the trade and it was making, let's say, 10 pips at the moment in profit, and the first target was 20 pips, that means when you enter that trade, the maximum you're going to achieve is only 10 pips. But what happens if the trade reverses? If the stop loss initially was 20 pips, you're going to lose 30 pips instead. Does that make sense? So ideally, you just want to go in around that price. At the end of the day, this is not like a price that was like coming from heaven and it has to be just dead on that price, if that makes sense. The educator saw that that was a reasonable place to enter the trade. So you have to give or take around 10 pips.
Yeah, because when you do a signal, you actually give your the price you get in at. I've seen other educators that just say enter at the market price, but that's not fair to people that are new. They don't know what the market price was. So the only thing I can think of is look at take profit 1 and subtract 20 pips from there, and that was probably the entry price.
So this is a very good point. I don't like it when they say like enter now. Some signals they write enter now, but most of Epic signals they show you the price. I think when you say enter now, that means in these kind of signals you need to enter there and then within the time, like within few minutes when it was sent, basically. Because what do you mean now? How far it is now? And if you do it your way, Nicholas, that's actually a good way of doing it because you don't know the entry price. But I'd rather put the price. And when you put the price, that gives you some time to analyze the chart. So you can go on Trading View, for instance, if you're using it. You can put that specific price where the educator suggested the price would be, and you can see right, like visually, where the price is where the price is at where the price is at right now.
Got it. Okay, so I'm gonna butcher her name. Oh, Lucy. I'm not sure if that's how you say your name. But the question is, if I'm entering late, how about I move my stop loss upward so I lose just 20 pips against 30 pips if it goes south? What's your views on that?
So I wouldn't recommend playing around with the stop loss and take profit sent on the signal itself, because if you're a brand new person, if you're a beginner, you don't have a clue how this trade, like you don't have any clue about the probabilities of this trade, right? So the person sending the signal, he sent it for certain reasons, A, B, C, and D, certain confluence that he saw or she saw, right? Now, the only thing that you have in front of you is the chart and the signal, and making a decision whether to enter or not. So you have to really try to be like, you have to pick and choose which trades you want to enter and which ones you don't want to enter, and you want to get into this habit as quickly as you can. Otherwise, you can easily blow your account. And if you enter late, okay, let me just mention this. Sometimes people think, okay, this trade is at a loss at the moment. Let's say you've entered the, let's say it was a buy. So you use the tool on Trading View for a buy, and it was showing that the trade was at a loss. some people will think, oh, so it's at a loss right now. Let me enter now. So if it hits TP, then I'm getting more pips, right? And if it hits stop loss, you're not thinking about that. If it hits stop loss, you're gonna lose more money than everybody else.
Yeah.
If it goes in your favor, you're making more, but that's risky as well.
Exactly. Like Marianne said, there's always going to be another trade signal. Don't start chasing things.
Precisely.
Okay, so the last thing I want to show is how to close a trade. So as we see on our GJ pair, we're actually 80 cents in profit. So if I wanted to close it, I just right click and I click on the little check mark and it says, would you like to close with a profit of 78 cents? So if I'm happy, I just click that. If I want to leave it alone, then I could just leave it alone. So let's just go ahead and close that. So look at that, our brand new account, our first trade is profitable. We are in the big time. Look at that, how much was the spread? 5 cents. All right, I am retired officially. That's my last trade.
Yes.
So we'll see how the AU pair does. But we'll go into more advanced things next time. Like I said, this session was more of a learning experience. This obviously is not going to be the copy and paste recording. This is more like the discussion about copy and paste. And then what we'll do is the next time we do this, we'll just get right into copy and pasting, have it done in like 10 minutes. So you guys can, have like a little tutorial to go off of. But yeah, so let's see. Uatea, you're late, brother. So it's okay. All good. It's morning time in Fiji. So yeah, that's pretty much all I had. If anybody wants to add a few things, like I said, we're going to do this session again. This was more of a learning experience because I've never actually had to teach copy and paste. So, it shouldn't be this long, but this was more of a discussion. So at least I know in the future how to teach it properly, because there's still a lot of moving parts here. It's not as straightforward as literally copy and pasting. There are some things we have to keep in mind here. Cool, Marianne. Or I'm sorry, go ahead, Michael.
Sorry, Nicholas. One thing I just want to add is, let's say, for instance, you were entering a trade with a lot size of 0.05. Can you please enter any trade, Nick, with a 0.05? Let's say you've got enough money for this lot size. So I want to show how you can take partial profits.
Okay.
So hit buy or sell, whatever. So now we've entered USD CAD with a 0.05 lot size. So one thing you may want to do as well to manage your risk more properly, let's say the trade hit TP1. You got an alert, it's hitting TP1, and you want to reduce your risk. So two ways. The first way is to move your stop loss to break even. And on top of that, what you can also do is make partial closures. So what you can do is hit on, like, try to close the trade, Nick, but don't actually close it yet. Just on this screen, you can reduce, you can close part of this position. So change it to 0.02, for instance. Yep. As you can see, where it says close with loss, so you're going to lose 25 cents by closing 0.02 loss. When Nick hits close now, you will see that you're still on the trade with a 0.03. Can you see?
Yeah.
So you're still, yeah, this is partial closure.
Yeah, so 0.05 turned to 0.03 because we closed 0.02. Okay, very nice. For some reason, I was thinking we can only do that when we're in profit, but obviously we can limit our losses too.
Anytime you can do it, anytime.
Cool. Yeah, we'll get more into that. But that was awesome. So, I thank you everybody for helping out with this. Like I said, there's a lot to learn just with the copy and paste part. But see, this is the good thing is your educators have done the homework for you. They've already anticipated that this is going to be a very good trade. So all you need to do is learn the copy and paste part of this. You don't actually have to read the charts yet. You're going to learn that as you go through the university. But in the meantime, as long as you learn this copy and paste part, you can actually make some money while you are learning. All right. So Marianne, D, Leonidas, anything else before we wrap up here?
Sorry, I'm looking at my dog. Yeah, actually, I just want to reiterate that you guys So many people just want to jump right into trading and not learn the basics and the fundamentals. And it doesn't work that way, because you're going to be lost and you're going to blow your account. Then you're going to get really discouraged and not want to do it. So I have to tell everybody this so many times, that especially new people, you have to start with the university. That's why it's there, right? Coach Max put it there for a reason. And the fact that we have that for $99 a month, besides everything else we get, is amazing. Take advantage of it. Start with the week 1, day 1. As soon as you come in, right? It's only 2-week syllabus. All the little videos are really short. I think the longest one's like 15 minutes. So get through a few a day. You don't have to do it in 2 weeks if you don't have time, but you have to do it because it's the fundamentals. It's going to answer so many of the questions that everybody still asks, right? So go through the university and make sure all your new people do that as well, because that's your foundation. Copy the signals as you go, sure, but if you're copying signals and you have no idea what is even anything that they're talking about, you're going to be lost. And just so do it at the same time, but make sure you do the university. That's why it's there. Coach Max put a lot of time into that thing. So, and it's amazing what we get with the study halls, the live sessions, all that stuff. You guys have to take advantage of that, and everything will become so much clearer. When I first started, I didn't even know what Forex stood for a couple months ago. I'm not joking. I didn't even know it meant foreign exchange. I had no clue. And I never even wanted to trade. I came into here to build. And then I saw the trading and I'm like, I don't know if I can learn that, because that's not me. I don't know anything like that. And I'm like, I can never do this. And then once I went to the university and learned, it's amazing now when I get on somebody's such like Michael's or anybody's session, I actually understand what they're saying. All the terminology, it just comes to you repetitive, right? Repetitive learning. You guys have to listen to the videos, watch the videos. They're there for a reason, and attend the live sessions, study, the study halls. There's so much stuff. Don't forget there's a calendar in your back office, right? Literally it says calendar, shows everything that's going on. There's no questions. Who's doing it? What time, when, what day. So go in there, do your schedule for the week, but you guys have to study and learn this and not just jump in and think you're going to make, 10 grand a day starting tomorrow. Okay. Just the whole mindset of learning and studying, and study the charts when you guys get to that. There's homework in the university for a reason. Okay. Do the homework, send it into the Trade House Telegram group. And tag the educator who signed it, so they can and they'll get back to you and they'll let you know, yes, you did this or you did this wrong, right? Then they want to correct you. That's why they're there. Okay. So that's my 2 cents. Just take advantage of everything that we have here and you guys will get it, so that's it.
Okay, awesome. Alrighty. Well, thank you everybody for showing up. I really appreciate it. We'll do this again now that we have collected some information and we kind of see how the process is, so we can streamline it for you even quicker. But don't be afraid to start taking copy and paste trades with your demo account, because the more you do it, you're going to learn more. You're going to see, okay, I messed this up. I could do this better. But if you start doing it with real money and you lose real money making errors, your mindset is just going to get messed up. I mean, like Leo, me and you have done like some mistakes, right? And then when you do a mistake, it kind of messes you up. So you got to make sure that, when you do those mistakes, you do it on a demo account first, right?
Yeah.
And that you actually look at what you did, right, Leo? And that's like, why did I lose that? Analyze why you lost it and why you won it, right? So then you know next time, and it's a little bit better as you go and take more trades, obviously. Yeah.
Right,
and like
because
Michael said,
really
trust or don't rush the process, but trust the process, right?
Well, yeah, because we have to realize that people go to a university to learn this over 4 years, and we're trying to learn it in 2 weeks, right?
Exactly.
So,
right.
So don't rush it. This is not get rich quick.
It's not going anywhere.
Yeah.
It's it's going to be here. It just slow down and take it one by one. Start from the beginning though. Don't try to jump in like you're a 2-year or 3-year trader.
Yeah, this
right?
is what
like a lot of people try and do.
Yeah, Michael's very big on having a 90-day plan. If you're not going to put a 90-day plan out, then you're literally trying to rush it. You're going to try to make something happen in 30 days, and that's where errors happen.
Yeah. So.
Cool. The market is full of opportunities. Yep, exactly.
Yeah, there's always opportunities right behind each other, right? So you've missed one, it's okay. right? Don't panic and freak out that you missed it and get in for willy-nilly. You know what I mean? Wait for the next one.
It's just like
right?
anything else, whether it's sports betting or whether it's
Right.
a race. You're not going to win every race. I mean, believe it or not, Usain Bolt did not win every race, right? I mean, it seems like it, but he did not. But you know what he did? He got so proficient at what he did that he's only what like his whole career he might have been racing like 20 minutes total, and he's made that like $100 million just for putting 20 minutes of effort out there. So if you perfect your craft, it will pay you over and over and over. All right, everybody, you all have a good evening or good night wherever you're at.
Thanks, everybody.
But we will talk to you soon.
Thank you.
Bye.
All right, take care. Ciao.